Well, we have started a program where employees can invest in our deals. So giving them ownership, kind of making it more of a transformational process for them to where it's not just a job. It's not just, hey, we got a 401k, but hey, you come work for REM, you can actually invest in the deal where you work. Pretty cool.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Robert Ritzenthaler grew up in construction. He was a CPA, turned to Wall Street, then managed over $1 billion in assets for a REIT. And currently, he's building a great multifamily real estate business one day at a time. Robert, welcome to the show.
Hey, appreciate it, man. Great to be here. Thank you.
Absolutely. Robert, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
You got it. We'll do it in 60 maybe, because I'm from New York.
Awesome. I love it.
So I grew up in Dallas in the construction business, moved to New York, as you said, spent a number of years in commercial real estate, working for other guys, making them a bunch of money. About 5 years ago, decided to start REM with the idea that there was a opening for a little more institutional approach to individual investors getting into the multifamily space. And we have since grown it to about 350-ish million assets under management, got 22 properties scattered around the Southeast, Midwest, and Texas. And well, at least with what we've got under contract, we'll be just across the $500 million mark by the end of the year. Well, end of mid fourth quarter. So yeah, cruising along.
That's awesome. I love that. What do you feel like was one of the things that really propelled you forward? I mean, 350 million in assets under management is quite explosive growth in the last 5 years. What would you say was 1 or 2 of the major keys that helped you kind of make such rapid growth?
Yeah, it's a great question. I think one for sure was being able to communicate the experience that we had to the equity side of the house, because obviously that's a big hurdle when you're starting out on your own. How do you convince somebody to, part with $1 million, 100,000, whatever it is, and put it into a deal? So I think that was key. And of course, that 20 years of experience in the business definitely helped out. It would have been a lot more difficult to come out of the gate saying, hey, I just quit IT. Nothing wrong with that. Hey, you got to start somewhere. But I think it would have made it a lot more difficult. So that was number 1. And then I think number 2, had a pretty good sense of how to put deals together from, again, past experience. So kind of from structuring to underwriting to stress testing, things of that nature, so that we didn't have any blowups, so to speak. Now, this market has been ridiculously forgiving to all of us, which has been wonderful. But we had a couple challenges. Our first deal, actually, a year after we owned it, tornado came through and ripped the whole thing up. And we went from 99% occupancy to 0 in about 48 hours. So, that's a good challenge to navigate that, which we did. And we had the right insurance coverage. We had the right working capital set aside, got that thing back up and running, rebuilt it and released it in the middle of COVID. And today it's cranking along, generating a nice, 9-10% monthly distribution for our investors. So, those things help. It builds a good track record.
They do. Yeah. Nobody wants a tornado no matter what. I mean, no. That's never good. What you said there early on, you said communication to your equity was one of the things that really helped you out, especially having the industry kind of experience to go with that.
Yeah.
What are some more, defined things when you think of that? You say, hey, this is one thing that I feel like other people maybe aren't doing or that they could do better.
Yeah, absolutely. So I think one-on-one phone calls are absolutely, vital to raising equity or bringing equity, whatever you want to call it. I think that's true no matter if you are just getting into the business or you've got $1 billion company. I have set three sort of core things that I will do regardless of how big we get. And 2 of them are people on the investment, that relationship, people in the operation side of it, that relationship, and then signing off on every single deal that we do. So those are the 3 pillars that I'm not giving up no matter how big we get. So that's how important it is to me, is having that relationship with your equity folks. But I think inside of that, something that has always been really helpful for me is just transparency. Not trying to pretend that you know everything, not trying to put on a show, not trying to be salesy, but just to be totally honest with people and say, hey, this is what we've got. This is how we run the show. Obviously, if you don't know what you're doing, that's going to be more challenging. But even if you don't, I think transparency and honesty and just, showing your integrity is super important. Because again, it's that know, like, and trust factor. If somebody can trust you with their money, they're going to hand it over. They feel like, I don't know about this guy. Right. Then it's going to be a lot more challenging. So I really focus on that. And I think people appreciate that. And it's a little bit almost anti-sales. Some of my guys chide me a little bit about that. They're like, Robert, you need to just close the deal. And I'm just so focused on wanting to understand each person's goals, objectives, where they're at in life, what they want, and making sure that it's a good fit for them. And I think people appreciate that. And you lose a few, but that's okay because there's 10 more referrals from the folks that really appreciate it. So I think that's been some practical things that I would recommend folks do.
Man, and you're further down this path than I am, but I would say that just to agree with you, one is the one-on-one phone calls are critical. I was listening to somebody talk the other day, and they said, hey, I didn't get much response from this deal that they had put out, and I said, well, how many people have you called? Like, you can email all you want, you can send text blasts all you want, but if you picked up the phone like it's 1980,
yep,
and hit dial, and they're like, well, no, I didn't do any of that. I'm like, you should do that to everybody on your list and then see Absolutely. What response you get. Right. I mean, because I know I dramatically respond different to a passive investment solicitation if somebody calls me directly. And it's like, hey, Sam, I want to know if you're interested. Well, yeah, maybe. You sent me an email, man, and there's 9 out of 10 chances I've hit delete. Like, I got to keep moving. There's 300 emails in there. I think the other thing that you said that I really liked there was just kind of letting go. Right. Mm-hmm. I think the more I've raised more capital, the less connected or less attached I get to, are you going to invest in this, or would you like to invest in this? It's like, hey, if this is good for you, get in. If it's not, don't. I don't care.
Right.
And I will tell you, the more I've said that, the more money has come in.
Right.
I don't care. If it's good for you, get in. Great. And if it's not, okay, no problem. I enjoyed our conversation. And so I think that loosening up that is, it's been, that's really great. So thank you for taking the time to share with us, kind of your approach on that front. That's really, really cool. You say the market has been ridiculously forgiving. Tell me, how are you guys finding opportunities now, and where do you see us going, since maybe we're exiting this ridiculously forgiving phase?
Maybe temporarily. I don't know. I don't see the Fed changing their policy that much, but no, it's a great point. I think, in the past, it was kind of throw a dartboard and you made money in multifamily.
Right.
And I'll be honest with you, I think it's going to come back to that in a fairly short order. Could be wrong, but I think, give it a year or two and we're probably going to be back to that era just because of the supply and demand curve that you can't really change overnight. That's a 10, 20-year problem. But interim, currently, we feel like there's a 6 to 12-month window of opportunity for folks that are operators, meaning how to control that process. In our case, we've got, 80, 85, I don't know, we might be at 90 people on the operations side of the business. So being able to have control of the business execution, being able to know what you're doing, plug in and knock things out is super important. But also focusing on cash flow versus just buying an asset and hoping that the value goes up is also really important right now. We've always been that way. So for me, I look at the business fundamentals and I say, hey, am I making more money next month than I am this month? Yes, absolutely. People say, yeah, but your interest cost goes up. That's true, but my rent's going up faster than my interest cost. And my interest cost is a much smaller percentage. My rent's, that's the whole top line. So I think there's an equation in there that tells us that the business itself is continuing to do better. Yes, we understand that valuations are taking a bit of a pause, but again, year or two from now, I'll bet you money they're coming back. I am betting money that they're coming back. So.
Oh, I think that's really, really beneficial. Do you see a lot of fear in the market right now? I think we see it across a variety of, every investor. It's pumped out in the news. Of course, the news is built on fear, so I'm not sure that comes as a surprise. What are you telling investors right now? And I know you just kind of hit on that a little bit, saying, hey, we're in a 6 to 12 month window. How are you making sense or logic of where the market is right now?
So I think the most important thing, which again has always been true, is stress testing the deal to make sure that you can make it past any downturn. So, like, for instance, the other day, I haven't done this in years. I stress tested one of our deals up to 8.5% interest 5 years from now at a 60% leverage. So, I mean, this is like valuations drop, interest rates stay high for 5 years. What does that look like? Hey, you know what? We can refi the debt we have today and we're good. We didn't have to put a penny into it. So that's the kind of thing that I haven't done in a while. But to me, that gives you confidence to say, okay, you know what? We're getting this deal for $2, $3, $4, $5 million less than we would have paid 5 months ago. We're going to get that $5 million back at some point. So if my business model works and it stress tests, we need to keep moving forward. Because on the flip side, you put that money in cash, it's going down in value 8 to 9% every year. Some would argue a lot more, but let's just use the headline number. So I feel like it's kind of a no-brainer in that sense. But again, the opportunity has been more for the operators that are looking at it long-term versus the guys that are kind of the fix and flip. I think that's where the market's gotten a little quieter, which is great because that's our competition. So, hey, you guys just take a little break for a couple of years here or 6 months, whatever it is. Let us step in for a little while. And that's kind of what we're seeing on the deals that we're getting right now.
Yeah, I mean, it certainly creates opportunity for you guys, on the acquisition side of things. I like the idea of just thinking long term, like, hey, we're going to build this portfolio. Yeah, and this is a long term play. What are some risks that you guys are actively trying to mitigate right now?
Well, the biggest risk, I don't know if I would say we're mitigating it. We're definitely working on it. Is people. The biggest challenge is people because it is so hard to find good help. And that's one of the reasons that I don't think the economy is going to go into some long-lasting recession, because right now, everybody who wants a job has a job and we can't find people to help. And until that really gets pulled back, which to me, I mean, we haven't seen any effect with all these interest rate increases. We've seen the stock market drop. We've seen real estate prices moderate, new home sales come in a bit. Nothing has happened to the wage growth. Interestingly enough, the Fed mentioned that last week when they raised the rates. They specifically said, hey, we've seen the supply side start to come in, but this whole wage thing is still going and we're a little concerned about it. Now, the interesting part about that is that if you look back, 3 to 6 months ago, Chairman Powell specifically said, we're going to let wage growth run because it's so far behind, which it is. If you look at everything else, wage growth is way far behind. So in my mind, I'm hearing him say one thing to keep the markets happy, but in reality, they're like, hey, this is just fine. We're good. Let those wages run. Now, from a multifamily perspective, I'm thinking 2 thumbs up, because as those wages go up, they can afford the rents. We keep chugging along. Everybody's happy. But I guess getting back to your question about the challenge, it's really finding qualified people. And we're trying to mitigate that through specifically finding recruiters, headhunters, people that we can rely on to specifically target other folks that are currently employed, convince them to come work for us, because that's our limiting factor right now. And I'll admit it's tough. I mean, it is a war for talent. I was just on a podcast last week with some other guys talking about it. And, if you can get the people there to renovate the units, you will lease them, and you will lease them at a higher number. Question is, can you turn that product? The faster you can turn it, the faster you're making money.
Right. And I guess that's the question is what type of talent, when you say that, what is the missing talent piece? Is there? Well,
the biggest chunk is maintenance and renovation for us. That's the biggest piece, because you got to go in there. With our model is we're doing value add. So we're going in, we're finding properties that need better management. They've got some deferred maintenance and they need renovations. So we're picking up work orders that haven't been, handled in 3, 5, 10 years, and we got to fix them all within a short order. It's a 24-month business plan.
Right.
So we got to have maintenance people. Then we got renovations. We got to get in there, turn, 80 to 80% of those units within the first 24 months, as an example. So you got a lot of stuff happening, and you got to have a lot of good people to get it done. So that's kind of the biggest challenge that we're facing right now. Just trying to get it all done.
What are some creative things you guys are doing in order to attract that talent?
Well, we have started a program where people can employees can invest in our deals. So giving them ownership, kind of making it more of a transformational process for them to where it's not just a job. It's not just, hey, we got a 401k, but hey, you come work for REM, you can actually invest in the deal where you work. Pretty cool. Not many maintenance people that can say, hey, I own a piece of this property.
Right.
So
right.
That's one of the things that we're doing. And I think it takes a little bit of time for people to really understand even how to communicate that to the prospective employee. It's one thing to have me sit there and explain it, but I'm not going to sit there on every single interview, So getting my people to understand that and communicate that takes time. It takes a little bit of education on my part, but I do think that's something that will set us apart and create some value that isn't that common in our space.
It's not common, and I guess that would be the hurdle I would see is what you just mentioned there, is being able to effectively communicate to that maintenance and renovation staff. This is what's being offered you. I'll give you a quick case in point. I used to own a service business, and I said, okay, to the employees, I said, look, I can put you on a pro rata sharing program, whereas if you get XYZ done, you could make maybe say 90 grand a year. Said, or you can stay hourly like you are, and you'll probably bring in between 45 and 60.
Right.
Guess how many of those employees, and it was like, this is not just fictional numbers. Like I can tell you based on our revenue, if we could just switch these things around, this could be your additional income. 0. None of them took it. They said, well, man, the problem is that, I'm going to get paid monthly on that and weekly on that. And I just can't, and I could never figure out a way to communicate. I'm like, wait, so you're going to pass up a 50% bump in pay just simply because you don't understand it.
Yep.
The problem is mine. I never did find a way to communicate effectively. So I'm just curious how you guys structure that in such a way that it then becomes appealing to the people that you're, offering that to.
Yeah. And we've had the same exact challenge. And that's where I've realized, hey, this is going to take a concerted effort starting at the top of me to educate everybody across the board. And in some ways, it kind of hit me that, hey, wait a minute, I'm educating our investors. I'm educating, the folks around us, the stakeholders that are part of the business. I'm not really educating our employees. Right. And hey, why not? I mean, they're just as capable as anybody else of being part of this process. So that's what kind of clicked in my head. Right now we have an annual leadership conference. That's part of what we do is educate. We're thinking about going to it twice a year, a biannual leadership conference. And that's one of the things that we're teaching is how do you invest? How do you grow beyond just being a maintenance guy? There's a lot to it. And there's fear because people think, whoa, wait a minute, that's not guaranteed. What about that? And so there's a whole educational component. Good friend of mine, Rod Cleve, that's all he does is just train people on how to do that. And it's super important because it's a complete different mind shift. And I come from an entrepreneurial family. Right. So for me, it's like waking up in the morning and big deal.
Right. So this is all we know is put food on the table. It's like, what do you mean I don't get paid regular? That's well, I've never known regular pay. Like
exactly.
No, but for the rest of the world that doesn't think like that, and I think you hit on a really key something really really unique there is that we do spend all this time educating our investor base, putting stuff out on social media, doing podcast stuff like this, but I think a lot of us don't spend any time on our own in-house people going, hey, wait, you too can learn how to invest in real estate. Like that's
absolutely.
That's brilliant. So I think that's a really cool take on how it is that you guys are finding talent and then bringing them in, but also making them part of the deals and building generational wealth for them too. I think
yes, exactly.
Because without them, without the people working inside of our company, we don't have a business at all.
Right. Well, and I think too, a lot of people look at it as they say, well, but if I promote this person too far, they're going to leave, and then they work for me a few years and they're gone. Okay. But the fact is, not everybody wants to go from 40 to 80 to 120 to 240. That's not what they're here for. They're happy doing their job. The question is, how can you provide a long-term, sustainable retirement growth, whatever? And I think that's a great way to do it. It really gives that sort of two-way, loyalty, if you will, because you're helping them, they're helping you. We're all in this together now.
Right.
So anyway, that's the thought process.
That's really cool. Robert, I've certainly enjoyed having you on the show today. Thank you for coming.
My pleasure.
breaking down what it is you guys see in the marketplace, how you're mitigating risk, how you guys are finding talent, the way you guys are raising capital, and your communications to your equity partners, and just kind of your thought process behind that. And of course, the one-on-one phone call. I love that. That's one of the things that, again, we already talked about that, but I think that's cool that you guys are really making that a priority. So thank you for taking time to come on the show today. Certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Easiest way is either our website, remcapital.com, or email me, robert@remcapital.com. Happy to chat.
Awesome.
Appreciate it.
Thank you, Robert. Have a great rest of your day.
Thanks, Sam. You too.